This week, Ernie Bio from ForgePoint Capital is with us to discuss the state of the security market. Then Sandy Carielli from Forrester joins us to talk about lessons learned from 2022's biggest breaches. Finally, in the enterprise security news, lots of funding announcements and new companies. Private equity acquires Multigo. Cinven acquires RSA Archer. Comcast launches a security product. Zscaler has beef with Gartner. CISA releases updated zero trust model. Tyler's going to love that. Amazon jumps into the AI LLM fray. AutoGPT stretches the imagination and potential use cases for AI. The ever-changing API security market, new security books just released, zombie birds, all that and more on this episode of Enterprise Security Weekly.
This is a Security Weekly production for security professionals by security professionals. Please visit securityweekly.com/subscribe to subscribe to all the shows on our network. Broadcasting live from G-Unit Studios in Rhode Island, it's the show where we talk security vendors and aren't afraid to name names. It's Enterprise Security Weekly.
When organizations face poor web performance, challenges building modern applications at scale, or need to reduce operational and development costs, they turn to Fastly. Fastly's distributed edge network means your business can unleash its growth potential without worrying about scaling your infrastructure, whether for growth of users, transaction volume, or geographic expansion. Get the speed, security, and edge cloud innovation you need to deliver profitable and engaging experiences. Visit securityweekly.com/Fastly for more information or to speak to an expert. Welcome to Enterprise Security Weekly and happy National Lima Bean Respect Day. This is episode 314, recorded on Thursday, April 20th, 2023. I'm your host, Adrian Sanabria, and joining me is the czar of Zero Trust, the captain of content, Katie Teitler. How you doing, Katie?
I'm fine. I was unaware that lima beans felt disrespected, but you learn something new every single day.
Well, maybe it's because they put it on April 20th, and so they have to compete with a different agricultural product on this day. So it's hard to get respect, maybe.
Okay, we'll go with that today.
As a member of the Security Weekly community, we are pleased to offer you 20% off your InfoSec World 2023 tickets. Join a community of over 2,000 security professionals and innovators at InfoSec World on September 25th through 27th at Disney's Coronado Springs Resort. Experience world-class learning and networking through enlightening keynotes, informative panel discussions, interactive breakout sessions, hands-on workshops, and more. Register today at securityweekly.com/InfoSec World 2023 using code ISW23-SecWeek20. All right. And today, for our first interview, we're having a long overdue state of the market chat with a VC. And we have a new VC for you. Today, we're excited to have Ernie Bio, Managing Director at ForgePoint Capital, with us today. Ernie has been in venture capital for 4.5 years and is focused on early stage investing. And before entering the world investment, Ernie worked with U.S. Cyber Command and the Pentagon, and he can also fly an F-16. Welcome, Ernie.
Hey, thanks for having me. Appreciate you having me on here.
Yeah, no, we get really excited about this because we do cover the market a lot. You know, we in the news segment every week, we talk about the latest fundings, acquisitions, deal rationale, emerging tech, emerging security markets, and new startups coming out of stealth. It's almost all the hosts on this program have been industry analysts in our past, so it's something that I guess just kind of sticks with you. And for us, it's just kind of following what the market is doing versus what's happening with cybercrime and what buyers are needing, and just trying to stitch all that together for the listeners. So it's but before we jump into the market, I wanted to kind of dive into your background a little bit. We've
Sure.
seen some crazy backgrounds in cybersecurity. Just last week, I interviewed somebody who was an award-winning Flair bartender turned pen tester. So tell me, what's the path from the cockpit of an F-16 to investing in managed security platforms?
Yeah, I do have one of the more random backgrounds in security and in venture capital. And for me, I started my career as a pilot in the Air Force, and like a lot of veterans, went to business school, went to a startup, did a bunch of things. And as a reservist, um, I was asked to entertain a job with Cyber Command, where I would go back on active duty orders, go out to Silicon Valley and help them build relationships with both VCs, but also cybersecurity startups as part of an entity called the Defense Innovation Unit Experimental, which was being stood up by the Pentagon. So this is in 2015. And long story short, I got very interested with cybersecurity, and I went and worked for U.S. Cyber Command, and then later that transitioned into a job with the Pentagon. So with that experience, I got to work with a lot of startups in the security space, as well as network amongst VCs to include my current employer. So it was a kind of unplanned phase in my career, but probably one of the best things that happened to me.
And is that also around the same time that cyber became an official domain, according to the military, or was that earlier than I'm thinking? My sense of time is all off now.
Yeah, no, that probably was really consummated when they stood up Cyber Command in about 2008. So I think that's when Cyber Command became a subunified command. It's now a combatant command, but that's when things got really serious, and they tried to, every service has their own cybersecurity component, but U.S. Cyber Command was that overarching entity that was stood up in roughly 2008.
Okay, yeah. And you already answered some of my other questions. I was going to ask why investing, and I didn't realize that the role in the military, your cyber role in the military, was directly related to getting into that industry and getting into that
Correct.
community. And that's interesting. Like now that you have hindsight, how is getting involved from the federal government side different from doing it from the private side?
Well, I mean, so on the federal side, you think about Fort Meade, there is a lot of technical talent, probably some of the best in the world. What I did was something very unique at the time under Admiral Rogers, who was running both Cyber Command and the NSA, because a lot of times it's the military plus the defense industrial base, and the commercial sector the private sector is largely left out. That has changed over time. So there's a lot of partnerships that have been built, especially with the work CISA's doing and Jen Easterly. There's also work being done at each of the services, as well as all the way up to Cyber Command. So what you don't find in the government is go-to-market expertise. You find technical expertise, but you don't find that go-to-market expertise. So I think when you bring those together, you can really create some magic, whether it's starting a company or bringing talent into a company that's scaling up.
Okay. And so let's talk a little bit about ForgePoint. I think I mentioned in your bio that you do early stage investing, but ForgePoint as a VC, is it all early stage and it's all cybersecurity focused, right?
Yep, we are a sector-focused fund, 100% cybersecurity. We defined early stage as Series A and B. So that's our sweet spot. Now, do we occasionally do deals a little bit earlier? Yes. And do we occasionally do deals a little later? Yes. But the sweet spot where we bring the most value is Series A and B, because we like to lead those deals. We like to take board seats. We usually take a director and an observer seat. So we tackle deals as a team, and for for us, that's how we bring value. Because in the market, when you look at VCs, especially in 2021 and in the last year, some VCs compete on valuation. So who's just going to pay the most, and others compete on value. And we tend to compete on value and helping our companies and being very hands-on.
Yeah, and so that kind of leads me to the question of, this is something I always wonder with VCs. I almost see it as like a funnel, like you might see a sales funnel or a marketing funnel in a business. There's so many vendors out there. We see dozens, even in the current market, we see dozens and dozens of companies coming out of stealth and raising money. And we do our best to talk about all the interesting ones in the news segment of the show every week, and still, we don't have time to talk about all of them. How do you like maybe starting at the top, if we're going to call it a funnel, at the top of that funnel, how do you choose what to invest in? Like, I've noticed a lot of what you've invested in kind of sits on that line between a software company and a services company, a lot of managed platforms, managed services, things like that. Just kind of interested in what that process is like. You said it's a team effort. How do you start to draw that down, decide, what you want to put money into? Like, does that exist before you see the company? Like, do you know what you're looking for and you go to find it? Or do you look at everything out there and say, that looks interesting, let's take a look in that direction? Or maybe all the above, I don't know.
Yeah, so one of the reason we were founded as a sector-focused fund in 2015, when this market wasn't as obvious, was that cybersecurity is complicated. It's changing. There's a lot of companies being built. It started, I should say. And as you know, there's a lot of features that are masquerading as products. There's a lot of vendor overlap. So for us, we looked at that complexity and we say, hey, we need to focus. The second thing we said is we need a larger team that can look at every inch of the market. So right now we have 12 investors fully focused on cybersecurity. To get to the other part of your question, we're thesis-based. So what we do is we leverage our advisory board, as well as our personal networks, as well as CISO networks, to try to look around the corner and say, what are the new threats? What is the new technology? What new technology needs to be secured? So it's kind of our crystal ball, because we can't be rear view facing. We need to look forward, but we need to make sure we don't look forward too much. So you think of things like homomorphic encryption, quantum secure encryption. There's a lot of things that you don't know the timeline, and that's when we make mistakes. So for us, is what's in the next 1 to 3 years? What do we build a thesis on? What companies are there? The ones we know about, the ones that may be in stealth, the harder ones to find. And that's how we start building our funnel. And we use a CRM to help aggregate all that data and share the data amongst the team. And we're constantly on our, like every other VC, we have a Monday meeting, but in that meeting, we're validating or not validating different thesis areas. We're looking at deals in our pipeline. And as 12 investors, we're all weighing in on, hey, I already saw this company. Here's an issue there. Or, hey, we should really look at this company. They're in stealth, but they're doing some interesting things and they have repeat founders. So it's an iterative process. And it's one that we're constantly fine tuning.
So I assume as well, as you're going through this, companies, especially early stage companies, they can change in the span of a year and a half, kind of dramatically. So that iterative process is probably really important. But if you're talking about future things, I have 2 crystal ball questions for you, actually, about startups. What areas do you think are going to be relevant in that, 2 to 5 year span? And what, not necessarily named companies, but areas of security? And what areas do you think will either consolidate or collapse or just, not be as hot as maybe they were last year or are this year?
Yeah, those are great questions. And I don't have all the answers, but I'll give you my opinion. So I actually just got off a board meeting, and a quarter of that board meeting was talking about large language models and generative AI. And if you asked me a year ago about it, I would have been, I probably wouldn't have said much about this, because if you think back 3 years ago, there's a lot of AI and ML buzz within cybersecurity, but at the end of the day, it wasn't really moving the needle. I think it's real now, and it's something that when you think of SecOps, when you think of bringing context and the ability to ask the right questions, reducing false positives for those SOC analysts. I think AI, we're going to see it in AppSec, we're going to see it within the CI/CD, and being able to remove vulnerabilities out of code, all the way at the left, at the developer's fingertips. So to me, it's something that cannot be ignored right now. As far as consolidation goes, we've been talking about consolidation for the last 5 years across different areas. I think where you're going to start seeing it more is in cloud security. And the reason I say that is over the last 5 years, we've seen cloud security posture management, workload protection, entitlement management, and all these different siloed things within the cloud. With, at the end of the day, whether it's a multi or hybrid cloud, all of those are connected. So I think you're going to start seeing more of unified platforms and a best of suite approach to the cloud. You're still going to have those point solutions, those best of breed that every CISO is going to want to plug into certain platforms. But I think you're going to start seeing more consolidation there.
And does that give some of these point companies, especially startups, you have to start small, you can't start huge. Does that put them at a disadvantage if there are these big suite companies, the Microsofts and the Palos and the Ciscos, that are able to gobble up companies and grow by acquisition as well as building their own? So does that put startups in a rough place?
So great question. No. So when we look at our portfolio construction, we have point solutions, and there's a very good reason we do that, and we have platforms. And the reason we like point solutions, and I'll give you but the market answer and then the VC answer, is with point solution, you look at a Palo Alto Networks, and you look at all the acquisitions they've done, they've all been, if not all of them, 90% have been point solutions. Because most organizations, even the best strategic cybersecurity companies, spend at least 70% of their R&D budget on maintaining or upgrading their current offerings. So they leave 30% for new innovation. And in order for them to catch up, they need to buy these point solutions. And that's been a part of Palo's strategy. You've seen it a little with CrowdStrike as well as SentinelOne. So you're going to see that from a VC standpoint. Point solutions are going to be companies that don't require as much capital to go in. They'll exit sooner than a platform. Platforms take a long time to come to fruition, and we'll have, from an investor standpoint, higher IRR. So for those reasons, we really like point solutions, but we like platforms as well. So you need to have both, because most of the platforms are going to take, you look at the companies that have gone public, it takes 8 to 10 years and several $100 million. If not, I think all the companies you see in the queue to go public now, whenever the market opens up, most have raised $500 million to $1 billion. So it takes a very long time. So those are some of the reasons why we love both point solutions and platforms.
So from a startup point of view, some people might be listening to this thinking, oh, I have this great idea, I'm going to go to market with the goal of being acquired. Isn't there a little bit of a risk to starting a company with that goal in mind?
Well, I mean, put it this way: when we invest, we say we invest with the exit in mind. So when we invest in a company, we in our investment memo in our deck, we kind of try to predict the future on who would possibly acquire this company, why, or if we think they could potentially become an IPO candidate. So as a founder, you always want to be thinking about an exit. What you don't want to do is try to rush that, so you get in a situation where you're bought, not sold. So for us, it's we're looking at the statistics over time, and if you look, roughly 50% of all the cybersecurity control transactions, M&A that's happened over the last 5 years, 50%'s been 100 million or under. Guess what? Almost all of those are point solutions. About 20% have been about 100 to 300 million. So now we're looking at 60 to 65% of all transactions over the last 5 years have been 300 million or under. If you're a platform, you are going to be acquired for well north of that, and especially if you end up IPOing. So for founders, they should always think about the exit, but that should not be what wakes them up every day. What wakes them up every day is, how do I bring value to the CISO and their team as fast as possible? How do I build the best product that integrates extremely easily into their current stack? If you're talking some of the point solutions.
And even now, when we're in a little bit of a down market, it's not the best market. VC money isn't flowing in the same way that it was a year or even 2 years ago. How is that impacting startups? We've talked on the show a little bit about being smarter with your money if you're a startup, reducing the burn rate. But are there other things that are a little less obvious that startups should be thinking about, or not even startups, but entrepreneurs who are dreaming up these ideas for new companies? What would you say to them if they wanted to be starting up a company right now in this particular market with the financial situation being what it is?
Yeah, it's really been the tale of two cities. When you look at the back half of 2020, all of 2021, and a little into last year, it was VCs wanted growth at all costs. And what did that lead to? It led to burning through your cash faster. It led to hiring well above what you probably should have. And fortunately, that's changed. And now, it's all about incentives. And for our firm, it never changed. We like companies that are that are growing at a sustainable rate. And when you look at things like burn ratio and other metrics, we want companies that are being built for the long haul. So now the incentives from VCs is, it's not growth at all costs. It's metered growth. We're not expecting doubling every year, although that's welcomed. What our expectations are a little more, brought down to reality. So as a founder, you wanna look at your runway and as a function of your burn rate, and ensure that you have enough capital to get in the strike zone of the next round. So if you're a seed stage company and you have aspirations of doing a Series A, which you all do, you want to think about and kind of work backwards. What do I want to be when I'm a Series A company? I'll tell you what I look for. It's different amongst different VCs since we come in at the Series A, but I'm looking at roughly 1 to 2+ million of real ARR, right? I'm looking at some of the SaaS metrics. We look at gross dollar retention, net retention. Some of those, it's a little early, so you have to take them with a grain of salt. I'm looking at how the team's been hired, what players have been brought in for the executive team and the extended leadership team. And one of the most important signals is looking at the customers. So we like to see, to throw a number out there, 6 to 10 key accounts that have the technology deployed at scale in an operational environment, not like an innovation, side project over here or very small. We want to be able to talk to the CISO, talk to the cloud security architect, whomever, and really understand what problem is being solved in their mind and why they're actually allocating budget for that. So that's how I would answer that.
And in a sort of sidecar topic to this, at the same time as we're looking at a different VC environment, a different type of funding model for a lot of companies, we're also seeing in the US the government coming out with new regulations, new guidelines, things from the OECD, things from CISA, that are putting a even greater focus on cybersecurity. And in some cases, it's things like information sharing. Great. In some cases, we're talking about software makers potentially becoming more liable if they're the cause of a major attack. How should startups or early stage companies be thinking about some of this guidance and some of the regulations? How will that or will it affect how companies grow and expand in the future?
Yeah, you're referring a lot there to Pillar 3 in the National Cybersecurity Strategy, which implies putting liability on the software producers. To me, if you're a startup, or if you're a later stage, or even a public company, I think you have a responsibility to do kind of best, just kind of how the internet's brought to you, best effort. It's best effort, looking at your supply chain, using the right tools. It's really people, process, and technology to ensure that you are shipping the most secure code. CISA and the FBI and a few other organizations, I think even have Five Eye organizations in there, just put out security by design principles that go into that. There are a lot of companies that are looking at source code now, looking at open source, looking at binaries. You have, on the other side, you have app security testing, whether it's SaaS, DAST, or even using IaaS now. Some companies are using SDKs to put in IaaS. So all of that, to me, leads to a best effort. Are you going to be 100% secure at the end of the day with motivated attackers on the other side of the spectrum? No. So the way I read that part of the strategy is, I think there's going to be a best effort that is required by whether you're early stage or you're late stage or you're public company. That's one. The other piece to that too is, look who stands to benefit the most from secure products. It's Fortune 500 and these larger companies that have a extremely large footprint and that are large attack surfaces for the nation state as well as criminal organizations.
Does that change potentially how a startup hires? Because when you're a young company, you only have a certain amount of budget, obviously, and you have to hire pretty strategically. So as some of these things become important as a builder of cybersecurity products, does that change? Hey, either I hire a developer or I hire an HR person. So does that change the equation at all?
I think it changes it slightly, but as a startup, your job is to build a product, get product market fit, get repeatability of your go-to-market, and then scalability of that go-to-market. So I think, and security organizations are a little bit different than because most of them are technical. A lot of them are former practitioners. So I think inherently a lot of cybersecurity startups have a maniacal focus on the security of their products, but you still need to hire your go-to-market team. You still need to hire eventually someone to lead HR. So none of that should be diminished. I think it's more of a focus and just being cognizant of it, because at the end of the day, when you think of just think of some of the largest banks in the country. Why are they going to buy from a seed stage or a Series A startup? They're buying from them, because they have a problem that they can't solve with the existing products out there. That's one reason. And part of that is building trust. And that's one of the things with cybersecurity is the sales cycles sometimes are long because there's a trust building component that takes time. There's usually some type of proof of concept, whether it's paid or unpaid. So during that process, trust is being built. And for a lot of these startups, they're going to know if there's an issue with the software at that point, and I think it'll become a self-fulfilling prophecy for companies that are cutting corners.
Yeah, and that's something really interesting that I've dived into quite a bit, working on the vendor side myself, and also being on the buyer side and the industry analyst side. You know, I've seen this from a lot of different perspectives, and it does seem like there's a lot of pressure there to, I don't want to say fake it till you make it, but certainly, there's a dose of that in any startup in any industry. And the marketing folks you hire are kind of trained on that, right? And there is kind of this pressure to speak to some of the current buzzwords of the age and things like that. But then you always risk that trust that you're talking about building, where you don't want to oversell what the product is capable of and what you can do. And, combining that, because that's a very kind of traditional, maybe software approach, and looking at some of your investments, this is a very interesting trend to me, that this, like the Bishop Foxes out there, the Arctic Wolves, these companies that kind of have found this combination of services and software that allows them to grow and be valued, kind of like a pure software player. So I'm kind of interested in your thoughts on that addition to the like 10 years ago, I don't think we ever saw anybody investing in services firms. And I guess services firms didn't really exist in the way they do now with some of the MDR firms and platforms that are out there.
Yeah, that's a unique thing about our firm. I mentioned point solutions platforms. The other one are companies like you mentioned, Bishop Fox, that started out as a consultancy, pure services, and over time have become a tech-enabled service. And we've done this with several companies across both of our funds now, where we have become, a tech-enabled service where there's actual material ARR that complements the services, and they become synergistic to a certain point. So in the case of pen testing, there's the future is automated pen testing, automated everything really, but in this case, automated pen testing. They have their Cosmos platform, but there's also always a need for humans in the loop for some, whether you're talking about entitlements for a lot of big banks, you're talking about pen testing in this case. So for us, we would never invest in a pure services company, but a company that transitions when we invest or right before we invest into a tech-enabled service. That is something we've done in the past successfully and will continue to do. And from an investment standpoint, you have what we call margin and multiple expansion. A services company may have, a good one, 50% gross margin on that services, whereas a product company is going to have 75, 80%. So as you bring in that managed service piece, you bring both the margins up, and then for exit and valuation purposes, you bring those multiples up.
Yeah, I think it's really interesting. And I've not heard that term before, the tech-enabled services. And, you mentioned talking, you had a board meeting where a good chunk of it was spent talking about AI LLMs, and we've been very focused on that as well. And we're actually talking about, in the new segment, AutoGPT today. And I wonder, even if you asked me just 2 years ago, just like you were saying, if automated pen testing was on the horizon, I'd say absolutely not. And then after seeing what you could do with something like AutoGPT, where it's basically, kind of self-prompts itself until it completes its goal, and that goal could be, any closed loop, point in time process like a pen test, or it could even be continuous, like Bishop Fox does with Cosmos. Are we suddenly a lot closer than we thought we were a year ago, do you think?
I do. Yeah, I think kind of everything changed back in November. Well, I'm sure people that were following AI closely, following everything OpenAI did, Google DeepMind weren't surprised, but to be quite honest, people like myself, I was surprised with the capability. And in my mind, it always came down to human machine teaming. You're going to have skilled humans in the loop that are augmented. What you could call it an Iron Man for security, Iron Man suit for security practitioners. Call it whatever you will, but being able to, again, if you're, and I know Microsoft just came out with their Copilot. How do you bring context and the ability to ask questions and reduce false positives and all of that stuff? How do you help a tier 3 analyst be able to do that faster with more efficiency? So I think that's the future. I don't want to get too excited because I think there's some downsides to using foundation models and LLMs. There's compute costs. There's limits on GPUs. There's a garbage in, garbage out type of scenario that can happen. But I think overall, we've hit an inflection point, and I'm very excited to see how this affects the roadmaps of our current portfolio companies and how this affects future investments that we do.
Yeah, same here. I mean, not I don't have investments, but yeah, as an observer of the trends happening, it's I use it multiple times a day, every day. It's something that I've been urging other people to do, because it's easy to make assumptions like, oh, surely it can do this, but not that, right? And you've got to try it, because I'm constantly surprised at both what it can do and what it kind of falls on its face on, which honestly, ChatGPT doesn't fall on its face much, but it's much more limited. And Google Bard is supposedly connected to the internet and can do a lot more, but 9 times out of 10, I find it's falling on its face on a lot of stuff. A lot of hallucination that was kind of erased with GPT-4. But it's really becoming clear to me that there are certain use cases, and there are ones that security can really get behind. Like most of the tasks you're going to do running a pen test, that work. Like somebody just hooked up Burp Suite, basically put together a project that connects Burp Suite with GPT, and but other things, like if you're asking it to inform you of things, to tell you things, it'll make up facts, it'll get years wrong, stuff like that. But simple tasks, that humans don't really like to do anyway, repetitive tasks, seems like it's a huge win.
Yeah, and let's not forget the attackers have access to it too. So you look at the just how much ransomware as a service has increased. You look at how phishing has gotten better. You look at, in I think Mandiant said in 2021, there were 50 0 days used. And in 2020, 50. In 2021, I think there were 81. So it's a benefit to us, but it's also helping the folks on the other side of the wall there that are trying to make our life miserable. Yeah,
that's a scary bit for sure. I've got a blog post I'm putting together on that I don't want to talk. I'm kind of nervous even talking about it, because you already kind of hinted at it there, ransomware as a service, and we were just talking about auto GPT, that could be a devastating combination.
Yep.
So let's, I want to shift back to earlier in the conversation. We were talking about, you were kind of talking about how you go through that funnel, how you, just kind of your day-to-day. You're talking to CISOs, you have an advisory board, you're probably having lots of conversations with founders, with the investments you've already done that you're advising. What shows up in your calendar that gets you most excited? Like, because I imagine most of your days are just mostly having conversations with people. But what part like really gets you, like you look at your calendar in the morning and you're looking forward to it?
So there's two answers there. One, I love meeting with new companies, whether it's first-time founders or repeat founders. But I love meeting companies where you have super passionate founders that want to solve a problem, and it becomes their life kind of revolves around that. And I've never been a founder, but I have ultimate respect for founders because you're really dedicating 100% of your bandwidth in life to solving a problem when all the odds are against you. You think of how fragile startups are, how many things that can go wrong, market macroeconomic conditions, competition, you name it, right? So I love meeting with these founders that just wake up every day ready to solve problems and kind of, take on the world. It's kind of a David and Goliath because a lot of times they're going against larger companies, or if they're in white space, they're doing something that's never been done before, and they're kind of feeling their way through the dark. So to me, that's exciting. On the other side, like other VCs, I guess we look at our investments and the companies. We work closely with the companies we're on the board as kind of our children. So as they go from, we lead a Series A and they do a Series B, they do a Series C, or there's an exit. Those things get us very excited. And some of that stuff is happening right now in our portfolio. So those two things keep me going at the end of the day.
Awesome. And then, as we wrap up here, talking about we haven't talked too much about the state of the market, like the more macro economic view, but eventually it'll, it's going to come back, and I assume there's going to be some kind of latency between, where we see it come back in terms of investments and exits. You got to wait for interest rates to change and some of the bigger stuff to happen before we can see that other stuff move. But do we go back to growth at any cost at any point, or are there any lasting effects of this that are going to lead to permanent changes? Do you think in terms of like we were seeing raises that were 4 months apart, 5 months apart, instead of the typical 18 that we were used to. Like Series B would come through just after we got finished talking about Series A. But what do you think it looks like after the recovery?
I think in the near term, so in the next, call it 1 to 3 years, we do not go back to growth at all costs. We look at what I mentioned earlier, where investors actually appreciate growth that's done in a very predictable and an efficient manner, while still granted, we want to grow the companies as much as possible, but we can't be doing around, to your point, every 4, 5, 6 months. That's just not sustainable. If you look at Q1 in 2022, there was roughly $8 billion worth of cyber deals done. This last quarter, which ended a few weeks ago, we did just shy of $3 billion. So VCs in general have kind of pulled back a little, but it really depends on where you look. In seed stage, where you're really betting on teams, the money keeps flowing in, and there's been quite a healthy amount. Even if you look at last year, it was only in seed stage where the number of deals went up. In Series A being growth, they all went down. So seed is a little different. Series A and B, what we're seeing there were a lot of companies that raised at valuations, which, to be blunt, they didn't deserve 12, 18 months ago. A lot of them are running out of runway and are unable to do a typical up round. So they're reopening their old round. They're doing some type of safe or convertible note to bridge them, or when things go worse, they're doing a down round, which gets into a whole nother conversation. On the growth side, I think you're seeing a flight to quality, and the growth investors are looking for quality deals. Some have been done, some have been announced, some will be announced here after RSA. But what they're doing is they're using public market multiples as really a proxy for valuing these growth stage companies. Because if you look at the end of last week, the company with the highest valuation, as far from a multiple standpoint, was Zscaler. Second was CrowdStrike, and they were both around 11, 10x forward revenue, 2023 or next 12-month revenue. So I think you got to look at it as seed, early stage, and growth, because different things are going on in each of those components of the startup landscape.
All right, awesome stuff. Ernie, you going to be at RSA or any of the Forge? I assume some of you are going to be out there.
Yeah, our entire team will be there, and we have 6 events going on. With the highlight, this will be the 13th year we do our flagship dinner Wednesday night. That's an invite only, and it's an extremely it's a great event to show our community, our network. So I am looking forward to it, but I'm going to get some sleep this weekend, take my vitamins, because it's going to be a busy week.
It is. Ernie, thank you so much for joining us. Hopefully we can have you back again. We like to make this kind of a reoccurring
I'd welcome
thing
it.
where we have this conversation as we see the different market signs and trends emerge. Yeah, thanks so much.
Hey, I appreciate you guys having me on, and all the best to you guys, and hopefully run into you guys at RSA.
Awesome. All right, stay tuned. When we come back, we're going to talk about lessons learned from 2022 breaches with Sandy Carielli from Forrester.